Hello everyone, and welcome to this afternoon's webinar with myself, Anna, and my husband David, who's sitting next to me. I'm sorry, we've been so caught up with what's been happening with the euro, the ECB, Donald Trump. There's been some news about tariffs. Everything's sort of kicking off all over the place. So, which is great because it means there's lots to talk about, lots of things happening on the charts. But before we start, as always, may I please draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be an extremely risky activity. So please don't ever think of using money that you cannot afford to lose. Here am I, that is David. We are going to be looking at the charts, the markets, through the prism of volume price analysis, supported by our quantum trading software tools. Volume price analysis, the main book, which sort of started it all off, explains the basis of the methodology, is up on Amazon, and really proud and thrilled that it's had so many 5-star reviews. I also have to tell you that some of the students of this methodology are currently incarcerated in various prisons throughout the US, and they're using their time to change their lives and have something to look forward to when they come out. And I do get messages from mainly men who have been studying the book and hope to, once they're out, to apply what they have learnt to the markets. I find it extraordinary. I believe they don't have any access to any internet, so I think David, they draw the charts by hand, don't they? They take the chart, so it's they are putting a real effort into, and everything is moderated before they can write to me and ask for explanations about VPA. So if you've not come across the methodology before, as I said, it's in this book up on Amazon, and the book is also accompanied now with lots and lots of worked examples, which you can find in the book that accompanies this one, and the examples are from the indices, stocks, and commodities. There's also a Forex version as well. The tools that we've developed are from quantumtrading.com. We're going to be using some of them here. I've got MT5, David has got NinjaTrader, but we're also working on the tools for TradeStation. As you can see here, everything we sell is covered by a 7-day money back guarantee, and you can buy one, you can buy bundles, or you can buy the full package. The main package that we use here is what we call the essentials for NinjaTrader. It's really all the tools, but doesn't include the Forex ones, which I'll actually have on my MT5 platform, and we'll have a look at those. And the reason I want to highlight the Forex ones, because we want to have a look at what's been happening with the euro. It's kicked off a huge reaction from Donald Trump. The technical picture of what happened on the euro dollar during the ECB interest rate announcement and the subsequent press conference was really a masterclass of being able to use VPA and some of our tools to really, look at what's happening on the chart. There's lots of volatility, lots of fast moves, but there are trading opportunities if you know what to look for and when to get into the market. So that's what we're going to use. The actual website is quantumtrading.com. Loads of videos, support pages that explain the tools in more detail. This is my site, annacooling.com, where you will find analysis for stocks, indices. Forex is covered by the specialist Facebook page that I run. It's called Learn Forex Trading. There's a commodities page, and there's also a trading stocks page. Anything else you want to add to that, David? I know that everything's sort of kicking off again at the moment, isn't it? So we really just want to get to the charts as quickly as possible. So let me just bring up the euro, or rather the euro dollar. This is actually the Dixie, the dollar index, and it's now the December contract, as we can see here on MT5. MT5 is a great platform. It's a multi-asset platform, and it allows you to participate in all across the markets. If you don't need a futures account, basically, and it's just a great way to. And also, if you can get a demo version of it, you can, you've got stocks, I'll show you actually here. Let's go and market watch. You can see what is actually on offer This is at the end of the thing, but if I just scroll back up, as you can see, I mean, literally hundreds of stocks. There's forex. There's versions of the commodities. So as I said, you don't need the kind of margin that you would require for trading stocks and certainly trading futures. So that's the Dixie at the moment. This is the price action on the 20-minute chart that we've seen from the ECB, dear old Mario Draghi. I use myself, I have a Renko chart, which is absolutely fantastic. This is the, let me just take that down a bit. This was prior to the announcement of the interest rate. The expectation was that the ECB were going to cut rates and they were going to go into negative territory. Well, it was also, and that is the first reaction, and that was the very, very sharp move lower. What then happened is, and it's and in part of the move, did they say he was going to be QE to infinity or something and beyond, as it were? However, when the press conference started, it all kind of started to unravel a bit in this for the Euro bears, basically, because it kind of, markets suddenly realised, well, it's not actually to infinity. It could actually only be for 12 months. There are also some option expiries in play. There's all sorts of other factors going on. Now, in the first reaction, in this sharp move down, obviously Donald, as we have here, was straight out of the blocks saying, you know, come on, Fed, everyone's going negative. We're being punished. Our exports are going to be punished. The ECB is a very aggressive move. But in fact, the move has completely reversed. The nice thing about Renko charts, the reason I have a Renko with a time-based chart is this, and not just for forex, you would use this for other instruments as well. As you can see here, you have no noise. It really doesn't, it just wipes out all the oscillations, fluctuations that you get on the faster time-based chart. And what it does is once you have your entry and you're in using a Renko chart, what the indicators that we've developed will do, they will keep you in. So for example, the trend dots, they will stay relentlessly blue. The trend monitor will stay relentlessly blue. When it's time for a reversal, you will get this sort of, you will get this transition phase. You will get the red dots. Here we actually had a pivot come in, telling us that there was likely to be a reversal. We didn't know whether it was going to be short term, medium term, or long term, but we know what to expect. The trend dots then change color. They go to this intermediate, they go to go gray, and then they go blue. And the trend monitor then follows suit. Well, how I tend to use this is basically I wait for confirmation of blue and blue. I don't tend to go into, has to be a very good reason for the intermediate, to going in when there's an intermediate color. Now, how that actually translates on the chart itself, let's put up the 3-minute chart, which is actually what I tend to use with the 3-minute chart. Here we are. So this is the, let me take the Camarilla off as well, because it's a little bit confusing. Here we are. Let's take that, there we are. Let's have a look. Let's have a look at the price. Right, this was the price action as we see here in the run-up to the announcement itself. Now, at the time, the volume point of control would have been here. I mean, it's moving sideways because obviously waiting for the interest rate announcement and then subsequently the press conference. And this is, there's always a knee-jerk reaction. Everyone, commentators were saying there would be a cut to interest rates. So what does the price do? Spikes up, traps people on the wrong side, and down it went. Then we had a little bit more consolidation while we actually waited for the press conference, and then this realization that, you know, there was a reason to buy the euro rather than keep selling the euro. This is where you go to another time frame. I tend to have the 12-minute chart. This is replicating the price action. We have a 2-bar reversal here at the bottom of the chart. But if we move to the 20-minute chart, what do we have? When you overlay one candle on another, this is when the buying came in. Why? Because we have a really nice hammer candle here with a ton of volume underneath it. And, you know, hammer candles, shooting star candles, they're very, very strong candles in candle analysis, as it were. There's a lot of volatility. As you can see here, the volatility indicator was also being triggered on the way up. But there was enough momentum behind this move, and more crucially, the volume to need to push this price higher. Now, what's going to happen next? Well, the first thing we have to look at is the volatility candle on the way down, because the top of that volatility candle, the high of that volatility candle, which is where is it? About where the fractal is here. Let's have a look at 1068. That is the high that now has to be taken out if the euro is to have, if you like, a medium term change of sentiment. So this is what's happening on the faster time frames. Let's slow this right down, because is this actually going to change the situation with regard to the euro on the very slowest time frame? Because I'm actually short euro at the moment. I actually have sort of short positions that I've had for some time on the euro, and I've got short positions on the euro Aussie. Now, if I look at it on the monthly chart, what's happening today has really, not really, I wouldn't say registered. Yeah, I have the volume point of control here at 1258, which is great. This is a huge line of resistance. That's last month. This is where my positions were, from about here down there. And what have I got here at the moment? Well, I've got a little bit of a pullback here. I've got the trend monitor on bright red. What's going to happen? Well, could it get back to the volume point of control? Yeah, it could well do so. But then, you know, what I'm seeing at the moment on the faster time frame charts for my longer positions, it is simply that. It is simply a pullback. I'm still bearish on the euro. And this is what you have to get to grips with as a trader. What are your preferred time frames? David and I actually trade both sets of time frames, but we do it in separate accounts. We have a number of accounts. So one account is, yeah, we're going to be trading short term. As I said, it could be, with me, it's the rain codes, the 3-minute, the 6-minute, the 12-minute on multiple time frames. Sometimes I go up to the 20-minute chart. And we will take positions, but not in the same account. We have the luxury of being able to do so. And then we have these other positions that have been on for weeks, sometimes months, as it were, based on what we see on these longer time frame charts. So that's basically what the euro is. As I said, the indicators that also help us in this is this one, is the currency strength indicator, which is, we call it the strength indicator, but it also picks up weakness. It analyzes the individual currencies and what they are doing, and you know, where is the flow. It really is, I suppose it's more of a currency flow indicator, because what's being bought, what's being sold, in what time frame. So when you see these overextensions, this is the yen, this is the euro down here, when they get to this point, you think, yeah, there is likely to be a reversal. Then the decision is there enough of, will there be enough of a move in that reversal to warrant taking a trade? Now, what we've also done, or I've done on this chart, I've actually uploaded two indicators to one. That is the breakdown of the individual currencies, and then the pairs themselves. This is another indicator we call the currency matrix, and this is what the euro has been doing. Now, what's also interesting with the what's actually moving at the moment, you can see here the yen is being sold off. Why? Because there's been something on tariff talk again. Before we started, I think the Dow was only up something like 32, but since we started, it's now shot up to 123. Sorry, and the indices have shot up as well. Simply, I think because of whatever. These days, you have to follow, whether you like it or not, Donald Trump Twitter feed. You know, you may not like it, I may not like it. You know, fundamental news seems to be takes a back seat. Whatever he says, or what he claims is going to happen or not going to happen, the market will react, and we have to be aware of that. The VIX is also down at 14. Not huge. Once the VIX starts getting towards single figures, what does that tell us? It tells us the market is becoming more complacent, volatility has left the market, and indices and stocks will be creeping up, as it were. Now, options, I talked about it this morning in our Forex webinar, because the options can also help on the Forex side as well. And what it can do is basically give us an indication of whether a currency pair is likely to be moving. Is there going to be some volatility? Because volatility also means momentum. There's going to be some action in that particular pair. And what we looked at this morning was the euro dollar, and we only look at implied volatility on the overnight, because I'm just looking at short-term trades. Now, when we had it this morning, what was the volatility there? About 17. It was up at 17 this morning. It has actually now calmed down. This is the current. It's at 10. And what the option market was telling us is that in the euro dollar there was going to be some action. We knew there was going to be some action because the ECB was there, was going to be happening, but it was quite high. It's as you can see here, it's calmed down, and now it's kind of rising again. It's just under 10%, as it were, which the euro dollar can vary. I mean, when it's down in the 6s and 5s, it does actually make trading quite tricky, because it's not ranging, it's not going anywhere. It might be in congestion. There's not going to be a lot of pips to be taken. And looking at these tables here, if you are going to be trading Forex, so for example, if we look at the cable at the moment, what's the volatility, the current, that's dropped right down because Brexit news is, well, it's, there's no parliament. Yes, that will probably pick up as we come towards the 31st of October, if something doesn't happen in the interim. Let's have a look here. Let's have a look at dollar yen. Where's dollar yen at the moment? There we are. That's at 8.9. Let's have a look. Let's have a look at Euro Aussie is another one that I'm in at the moment. Let's have a look at that as well. That's kind of calmed down a little bit. That was very high this morning. Pound yen is always a very lively pair. As you can see here, that's 10, but that's normally up here at 20, 23. So it's just a way of trying to gauge. Certainly this one, as I said, on an overnight basis, is what is happening in that pair? What does the option market think? Is there likely to be a half decent move, as it were? And then we go to our charts, we have a look at our indicators, see what they're telling us, look at the charts, look for volume price analysis setups, if you like, with shooting stars, candles, 2-bar reversals. There's lots and lots of candlestick patterns. We use particularly the volume point of control, hugely important, because this is based on, it's a combination of volume at price and market profile. So as we can see here in the run up to the announcement, what was the price doing? Absolutely diddly squat, nothing, because it's waiting for this announcement. Then you have the breakaway, first to the upside, then to the downside. And as I said, you will see the volume point of control, the fulcrum of the market in all time frames. And the ECB aside, no market, no instrument stays range bound forever. At some point it will move. It may not move as violently as it did today because of, as I said, of Draghi, but there's always a trade to be found once you can identify that point on the chart that is, in market profile parlance, fair value, because at some point that is going to change and a trend will begin. And that trend will either be smooth, with no volatility, or it could be a trend that we have here with volatility where price is outside of the average true range. David, what have you got? Something exciting? Oh, David's all over this. I think you've got gold, haven't you? He's got gold, he's got the indices. Yes, if you want to catch up on our thoughts on the indices, there's the latest post went up this morning on the ES, the YM, and the NQ, which you're more than welcome to go and read. Any questions on anything I've said or David says, please just drop them into the chat box. More than happy to explain what we are talking about.
There we go. Should be coming up any minute now. Just have a look over. Yep, they're up. That's great. And welcome aboard, everybody. Good to see you today, and hope you're enjoying your trading this week. And yeah.
Hi, Linton. Right.
Let me just switch off.
basically, yes, when you say you don't have a solid line there, it's because you've probably, that's it. If you expand the charts like here, what you have is the solid color breaks up, and it's simply because you've got the candles zoomed up, as it were. But as soon as you reduce it like that, it goes back to solid. That's all it is. It's nothing. It's just the zooming in and out of the charts. Okay. Oh, sorry, I didn't show that. Can you show that? Let me just bring it back here. Sorry, I forgot. You were looking at your
Anna's
chart.
talking to the screen. You're actually looking at my screen.
Yeah,
hold on a minute.
Let's just lose. That's it. Okay. It's a bit stupid, wasn't it? Right. I do beg your pardon. Right. This is what the trend monitor looks like, where you've got the solid colors, the in-between colors. Once you zoom into the chart, voila, what happens is the colors break up because you have actually expanded you've zoomed into the chart. That's all it is. Is that okay? So when you zoom out, it goes back to the solid colors, and very quickly makes sense. It's very straightforward, Linton. Okay, what is a good MT5? MT5 is the platform that is that's made available to you by a broker. Most brokers offer MT4, some offer MT5. It's just not another version of MT4. It's the same architecture, but with MT5 you get more time frames, don't you, David? My time frame. And I think you can do some things with the charts themselves. For example, what you can do on MT5 that you can't do on MT4 is basically do this, which is go to docked, and it means you can actually take the chart away and move it onto another screen. Now, you can't do that with MT4. MT4, you are restricted to the screen that you are working on. I think it's got some other features as well. I have it purely because I like the different the option of using more time frames than are available on MT4. But as I said, it's really right. Yes, not all brokers offer MT5. Now, if you want to use MT5, there's nothing to stop you going to MetaQuotes and actually downloading the platform for yourself. There's no timeout on it, is there? MetaQuotes, no. No, if you just want the platform. Yeah, if you just want the platform, I think you can go to MetaQuotes and just download the platform per se, just on its own. But obviously, if you want to use it as part and parcel of, and then you could do your analysis on the platform and execute the trade with your broker, or you find a broker that does offer MT5. But IG, if you're spread betting with IG, then I don't know which of the spread bettors actually offer MT5. You'd have to do that research yourself. As I said, I just use it for short-term forex trading. Okay, can I move back to you now? I hope that answers your question.
Just coming back onto NinjaTrader again. Click that one, show my screen. There we go, should be coming up. Yep. Good stuff. Okay, I've actually got, I'm going to be hopping around a bit. I've started with the, hopefully you can all hear me okay. Just check with Anna, she can hear me okay. Yeah, fine. I've started with the Aussie yen because I'm sure as many of you know, it is a good proxy for risk. And what's reflected, the knee-jerk reaction that we've seen in equities, we've seen in gold, and we've seen in forex markets. It's reflected in the Aussie yen here. This is it. This is Trump. News about China, and I'll hop over onto the indices in a moment. But the Aussie yen is a particular pair, one of several that we're currently long in, been long in for some time now, particularly since we had this very strong signal. Ton of buying coming in. That's what we saw. And ironically, it was on a holiday for us. It was on a bank holiday. A very, very unusual, extreme volume on a bank holiday in the UK. So something unusual. We noted it, saw the massive volume that came in at the end of the session and got ready to trade these. We've been long these for a little while now across the yen complex. So we're selling yen quite heavily, and that is continuing. and that is continuing on in today. And I've highlighted this before. I highlighted in the private forum we have for the education students. This very strong level of resistance, which has now been breached today. I want to see a nice clear away from that, close up here somewhere today, hopefully. And then as we climb on up, we've got a low volume node here on the daily, which should see us through. We've got some high volume here, so that's going to cause a bit of a pause point maybe, but a low volume node here, so we should go through there fairly quickly. And then we come up to the volume point of control. I'll just move that out of the way, the chat box, which is up at 75.50. And at that point, that is the point at which we expect to see markets congest, purely because they're running into high volume, old orders, massed around this region that is the volume point of control, remains the point of control for the time being, but that is the highest volume concentration on the chart on the daily time frame. So we expect to see the market, if it gets that far, to obviously congest at that point, and there we will make a decision as to whether we're going to close out, sit through the congestion, which will undoubtedly follow, or just wait for the market to continue high if that's what we think it is going to do. But it's all reflected in sentiment. This was the knee jerk. This is on the 3-minute time frame. That's it. Remember, this is on an Aussie yen chart, a forex chart, which many traders think is totally unrelated to all the other markets. It's not. All the markets are interrelated, as we explain in full detail in the relational analysis module. Big spike. We're still trading around inside the volatility trigger there. We've got the little purple arrow top and bottom. That would have been triggered instantly. And there's two things about this. First of all, when you get these knee-jerk reactions, they are often like a souffle. They will rise very rapidly and then deflate. That's what we're waiting for at the moment, for a deflation. If it's going to continue higher, then it's going to have to continue higher with volume. But when you get these Twitter tweets from Donald or anywhere else, then it's an instant reaction. The market responds literally in nanoseconds, and then it's considered, or the algos do at any rate, and then the market calms and we move into a congestion phase as the reaction to it is absorbed, and if it's overdone, then the market will deflate again. So that triggers in real time, ton of volume underneath, market makers and big operators are in there, nice trap move, everyone's jumping in there, market's very fast moving, getting sucked into a trade that maybe now they're regretting on that particular opportunity. And you can see that across all the time frames. Across the top I've got 15 second, which is very fast, got 3 and 5 up at the top, and then down at the bottom 10, 15 and over onto the daily, but it's pretty much universal. We just go over to the three sisters, the indices, the US indices. There we go. That's it there. And again, almost identical price action. The top left is the YM. This is the futures contract for the Dow 30. This is the futures contract for the Nasdaq 100, the NQ. And this is the ES, which is the futures contract for the S&P 500. I've rolled these over into the December contract because it's rollover day. So the contract for September is now running to expiry and it'll be rolled forward into the December contract now, which is scary actually. We've gone through almost another trading year. Down at the bottom, I've got the daily charts here for the same three indices, the YM, the NQ, and the ES. And what's interesting about that at the moment, sorry, that's gone to 5 minute. That should be on the daily. Just flick that over onto the daily. There we go. And as you can see, they're all following suit at the moment. They're all nicely up. The NQ, the ES, and the YM perhaps less so. And as we highlighted in the post, what's interesting in here was the fact that the YM was continuing higher. So basically, we've had 6 or 7 straight up days on there, whereas on the NQ and also on the ES, we had a flattening and indeed a couple of days here of divergence where we had a market that was moving lower whilst this one was moving higher, which is always interesting to see because it doesn't happen that often, and when it does, you have to pay attention to it. There are opportunities as a result, because if you've got 2 driving against 1, then the probability is that the markets will move higher against the index, which is moving lower. So that's where we are at the moment. Let's go back onto the time-based charts, and I'll flip that over onto the NQ. So let's change this over onto the NQ. Not 91 yet. If it was 91, I wouldn't be here. There we go. That's it. We're now on the NQ. So we've got the 15 second, we've got the 3 minute here in the middle, we've got the 5 minute over to the right, and down at the bottom here, we've got the 10 minute, the 15 minute, and over onto the daily chart, which has just been to. And if we just pick up the 10 minute, that's where we are. We've had this big surge, ton of volume coming in, lots of volatility on that candle. What are we expecting? We're retracement inside the spread of that candle and more sideways price action to follow. And that's basically where we are at the moment. Is it tradable at the moment? It's tradable in the context of if you want to trade on a 15-second time frame down here, although even that is in congestion for the time being, so it's pretty tight. But as I've said many times before on these webinars, it's a great way to learn VPA, because what you're reading down here in terms of volume price analysis and the price-based action, it's exactly the same whether you're reading a 1 minute, 5 minute, 10 minute, 15 minute, whatever time frame it is that you choose. But as you can see, we're in congestion right now. We've got to be patient and wait. This market is also breaking up into a relatively new high ground, or certainly into new high ground at some point. Once we get through 8,000 up into the 8,010, 15, 20 area, then we're out into new high ground. So inevitably markets are nervous. On the 3-minute chart here, we're trading inside the volatility candle still. If we're going to move to the upside, then we want to see a breakthrough. Certainly, I would say around this level here, well above 8,000. 8,000, a huge number, psychological number. Probably see the markets pause at that point. If for no other reason, it's a massive number. We've also got these tops in place here, but as the volume falls away on the volume point of control, then you would expect that to move through there relatively easily. The trend monitor is in transition. You can see we were bullish. We're moving into a transitional state of darker blue. The trend line has dived quite strongly. It's back down almost to the fulcrum point here, and it looks as though we've got a full-blown reversal. And this is what I meant by the souffle effect. It's a great way for traders to be trapped. You can see the speed the market's moving at now. It's going completely the opposite direction. So all these traders who've jumped in on this looking for a nice move, quick move to the upside, are now either stopped out or they've got out the market at a big loss, purely because they jumped in on this volatility trigger. Can't explain it in any other way. It's just a very simple mechanism. You can see it here in real time. We've got one, we've got another one, bang, come in, high volume coming in. It's not trading in the range, it's following through. You have to wait for the next one to develop. It's spiked down further. Really moving quickly now. And if you're going to jump in there, you've got to be quick, because the prospect is that we will see a reversal off one of these in due course. You can see it developing here on 10. This is in real time. Remember what I said earlier on, this triggers automatically before the candle closes. So for a fact, you know you've got volatility in here. I haven't got the volume switched on down here. I can switch it on just so it builds in real time. Just change that to, there we go, on price change, there we go. Okay, that'll pull the volume in, there we go. So now you've got the volume building in real time. But the volatility trigger's already come in. It's come in real time, so you know you're in outside the average true range, which is what this indicator is all about. It triggers that instantly. We're now starting to see a reaction off that and a reversal back higher. And the market moving in this way is designed by the market makers for the market makers and the big operators, because when you get a move like this, if you're not quick on your feet in jumping in and you don't have this indicator, then you're going to get caught and you're going to get trapped in these reversals all the time, because when the markets move at speed, it's designed for one thing, to draw you into the market on the fear of missing out, FOMO. It's as simple as that. You're watching the screen, you want to trade, you see the market suddenly react one way or the other, you want to jump in and make some money. You jump in when the market's fast moving, not when it's sluggish, and you get trapped in a reversal position and either get stopped out or you take yourself out of the market one way or the other. Just pull the 15-second up because it's quite interesting at the moment. More volatility, another volatility trigger, trading around in there, reversal. Bit of buying coming in under that candle, but not enough to reverse it. The trend monitor, you can see, has gone bright red, so we've reverted. And this occasion, we went straight through from the bullish sentiment straight through into bearish. Volume point of controls drop. We've got higher volume building in this region now. It's building pretty quickly. And I said this was occurring across all markets. If we go over to gold, there we go. We've got some pretty heavy selling on the dollar, or have been. This is on 15-minute. This is the dollar, this is the yen. And the reason we've seen the yen selling quite strongly is because we've seen equity markets rising, and that's now starting to kick up. So we're starting to see a reaction in equities, and that is counterbalanced by a reaction in gold. This was the reaction in gold. This is on 3-minute. Let's just pull that up. This was the reaction to Donald Trump. a big sell-off in gold. That fell from, I was about $10 or $15 an ounce, I think, something like that, $10, $12 an ounce on the news, purely because that is a move out of safe haven, if you will, and into risk on. So it's in other words, it's from risk off in a safe haven environment, a safe haven asset class, and out into a risk class in terms of equity markets. That is now starting to reverse as you're starting to see the equity markets turn. You're starting to see gold rise again on the back of that. Decent volume under that one. We're back at the volume point of control. This is on 3 minutes, so we'd like to see congestion building thereafter in terms of the gold price. And in addition to that, you've also got the dollar selling off, or it was selling off. Ironically, at this point here, we had the dollar selling sharply and we had gold selling at the same time. The relationship between these markets is not cast in stone. It doesn't automatically equate to dollar weakness, commodity strength, and vice versa. And on occasion, as here intraday, and certainly over longer periods as well, slower time frames, you do see some of these relationships break. You'll see gold rising with the dollar and falling with the dollar, and that's the case we had here. We had gold falling with the dollar. The dollar's now starting to kick up, or just transition here on 15, and we're seeing the reaction in gold to the reaction in equities as well. Let's just go back onto the time-based charts again. So where we are, back in a congestion phase. This is what we expect to see. This is on 15 second, on 3 minute. We've got a long-legged doji on 3, beg your pardon. And we've got volatility on 5, volatility on 10, volatility on 15. This one hasn't completed, but again, we've got the volatility trigger. You can see it here and here. So there's just volatility on volatility at the moment. It's very whippy. It's very, very jagged price action. It's not smooth. It's not easy to trade. There is money to be made, but you've got to be quick on your feet, in, out. If that's not the style of trading you prefer, this is not for you. You need to wait for the markets to calm and develop more even-paced, measured price action. Just go over to the daily charts for the currency indices, pull them up. This is what we've been seeing over the last sort of couple of weeks or so. This is the yen index. So we've seen some pretty strong yen selling here. And that's reflected across the yen matrix pretty much universally. Not quite so much in the pound, but that's down to Brexit. Otherwise, it is pretty universal. This is the dollar index, which has peaked out. A little bit of weakness again, trying to rally, falling back, but it's still pretty strong. And until it breaks below this level here at around 12,360, 12,370 odd, then that is the floor that will trigger a deeper move south. This is the euro down at bottom left. These are all daily charts. This was the reaction to Draghi. Big fall. Now we're seeing a reaction higher, starting to flatten off a bit. And this is the pound over on the right. These are the 4 indices, all available on NinjaTrader, the quantum indices. And this is the pound. This is the gentle buying that we've seen coming into the pound as Parliament's closed for business at the moment, theoretically. The Brexit negotiations rumble on, the court appeals and all the rest of it still rumbling around in the background. But the actual buying of the pound has flattened off a little bit now, particularly as we're running up into this from a technical perspective at any rate, resistance in this region up at 1112, 1112.50. So that's where we are on the indices, on the currency indices at any rate. So we're back onto the time-based chart, see what's going on. It's all still pretty choppy. Any more news on the feeds? Just check with Anna, see if there's anything going on in terms of news updates. Let's go on to the 15. Nothing? Okay. Okay.
An intra-China delay.
Okay.
Preliminary discussions, but he's yet to approve it, so it could all just be speculation.
Trump's Twitter handle, I suppose, is like the old-fashioned rumor that used to fly around the pits in the old days. A rumor would come in and it would spark a market reaction, and it's just a lot quicker now. Got congestion as we expect. We've got the volume point of control here. These levels here are on the accumulation distribution indicator, and basically they define areas of increased strength. So the wider the line, this is a narrow line. This has been tested once and held. This level was tested once. This was tested 3 times, so that's a much stronger area. This one that's being tested right now is 5. So that's been tested and held on 5 previous occasions. So it's capping the advance at the moment. If it's breached, then it becomes obviously support, and a decent level of support at that. Right up at the top of the chart here, you can see this level here, which is very strong. If the market regains that, then it's going to find that difficult to break through. And as we move away from the volume point of control, obviously volume nodes come and go. The low volume, we've got volume falling away all the way through here up into a nice low volume area here. So all the way through this region of price, if the market is going to rally, it's going to be easier to get through these levels, because from a volume perspective, the volume there is much lighter. So it provides less in the way of resistance, and it works in exactly the same way as price-based support and resistance, of which these are. These levels here are all based on price. In other words, how many times an area of price has been tested and rejected. Whereas the volume chart gives you the volume histogram on the volume point of control, of which this is the fulcrum right now. This volume histogram gives you a perspective on the depth of volume that is building and constantly rebuilding in these regions. And where you get to low volume nodes, then you expect the market to move through pretty swiftly. And where you're testing into or reaching high volume areas, then the market maybe is going to struggle a little bit. And all of this volume profile here, this is all distorted by this massive amount of volume that came in here. And the only way to get rid of that, you can expand that out from view, and it gives you a little bit of a better perspective on what we're actually looking at the moment in terms of the volume profile. But that's what's compressing everything right now, that huge surge in selling pressure. And you can see the reaction here. I mean, just eyeballing it, this rally here. Look at the amount of volume that came in on this last chart and on this last candle here. So that hardly looks strong. It's a tiny amount of volume when compared with what went on earlier on. So it's no surprise to see this market flip-flopping around. See if we can see anything on the other time frames. Up onto 3 minutes. And you start to look at potential levels for an entry if you want to get into this market. Perfect long-legged doji candle there, nice little body, big wicks to either side. That's a classic long-legged doji candle. Doesn't imply anything. All it tells you is market indecision. The market does not know which way to travel at the moment. Lots of volume beneath it. It's not a signal of a reversal. It's not a signal of a change in trend. It's not a signal of anything other than complete indecision, where the bearish and bullish sentiment is in agreement. There is no bias one way or the other. And that's sitting right on top of the volume point of control, which is another definition, if you will, of indecision, where the market is in agreement in terms of price for the time being. So until bearish or bullish sentiment takes hold, market's going nowhere. The euros are coming off the if you remember on Anna's MT5, the top of the volatility candle that she highlighted, the euro, is it euro Aussie or euro dollar? Euro dollar actually got to that level and is now starting to reverse off it again. As Anna said, good two-way price action, but it's not for everybody. It's if you want to trade off a 15-second chart or faster even, then that's fine. It's something we do from time to time because it keeps us sharp, but it's not for everybody. And you have to have everything set up correctly. You've got to be able to have a single button click entry and a single button click exit. It's that quick. You have to be that quick. There's no, I was going to use a rude word there. It's no messing about with defining where your stop loss is going to be, picking a stop loss. Shall I put it here? Shall I put it there? You just get in, you put a hard stop in. You have a fixed stop loss, or what we call a hard stop loss. So you go in with 5 or 10 points or whatever it is in terms of the market you're trading. Bang, in goes the order. You sit there, and then you close it out. It's as simple as that. There's no other way of trading that quickly. You're trading close to being an algo, if you like, but you're doing it manually. And of course, you've got to get out as quick as well with a single button click. But it's perfectly fine to do. If that suits your trading perspective, if that suits your trading personality, that's great. If not, then stay away from it. And when the market is in this sort of mood, when there's a lot of volatility around, there's a lot of indecision, there's a lot of sideways price action, then stay out. But there are plenty of opportunities to trade in here. Absolutely no problem at all. If you're happy trading on a fast time frame, very fast time frame, and quickly, and multiple times a session as well. This is a really nice chart. I know it's 15-second, but nevertheless, it just defines everything. It gives you those regions to note and to decide that if it goes to those levels, then that's the point at which I will get in. So if we go to the upside, this ceiling here is very strong. It will, of course, become support. The question you've got to ask yourself is at what point. You've got to wait for the candle to close to this region. It may close very close to it. It may close a little way away from it. Is that enough for you? If it got to 60, if it got to 61, 62, because through that region, you've got some very lightweight volume, which is nice, and very little in the way of price resistance to the upside. So if we got through here, then that is certainly one level where you'd be looking to jump in long. If you're going to go short, if the market is going to break to the downside, certainly trend monitor is in transition at the moment. We've gone from bearish into darker red. We've gone into a darker blue. So it's looking to transition into a bullish phase at the moment. But if it's going to turn bearish, then this is the platform of support that's holding it up at the moment. It's very neatly defined. It's very clear. So once the market gets down to anywhere 45, 46 maybe, then you've got light volume below, and you've got an opportunity to clip some money out of the market, moving down to 40 and maybe further. Certainly to the upside, if you get in at 60, 61, you've got 10 or 15 points up here of clear water, which is very nice and handy to have. And that could apply to any chart, 1 minute, 5 minute, 15 minute, 30 minute, doesn't make any difference. Principle is exactly the same. Obviously, what you'd be looking at is the volume that associates any move away from this region, because on a break away from congestion, what you want to see is good, strong volume, nice price action. You don't particularly want volatile price action. You want nice, even pace price action, candles without wicks, and good volume supporting, and that will then confirm that the breakaway is genuine and not a fake. Not a fake out. Can I pass back to you, Doug?
Yeah, do you want to wrap up?
Yep.
Do you want to wrap up?
Yeah. I don't mind. Let's just have a quick. Just going to see. I'm just going to see what. Where are we on the time? Sorry, just going to see what the Aussie yen's up to. That's probably going sideways as well. Yep. Okay, that's going sideways too. Pretty much the same thing as you would expect. We had the volatility trigger, reversal, another volatility, absolute ton of volume, another trap move into the volume point of control here. Very strong resistance overhead in that time frame, and more congestion, more trap moves developing. Up onto 15. Trading in the spread of that candle, no great surprise because it closed well over halfway up the spread of the candle. Lots of volume below, so there is buying in that particular candle, as indeed there was selling in that one. Just going to have a quick look at gold. Okay, you can see the dollar. I said the dollar was getting to a point where it was starting to kick up, and it is, and the yen's starting to kick up too. And if you're trading indices and you're looking for sentiment, then the yen is certainly a currency to follow, because that will give you a clue as to why equities are moving north or south, depending on what is going on there. Interesting that both the dollar and the yen are moving together. So if you were looking at the dollar-yen forex chart, spot forex or futures as a trading opportunity in this particular time frame, wouldn't be going anywhere at the moment, because the two of them are following one another around like, well, I can't think of an analogy actually, but it's like the two train tracks. I always use the two trains traveling on the same track. So there's no divergence there between the two currencies to give you a trend. So there will be no trend on dollar yen right now on the 15-minute time frame. I don't even need to look at a chart to tell you that. Gold is recovering, pushing a little bit higher. And exactly the same principles. This is the gold chart. It could be anything. Got some really, really nice platforms of support in place here. Now we've got the volume point of control. We've got these very strong levels here. We breached this one at 21. So we've got some very nice platforms of support here on 15 second. You can see another one just built there. This is a little ceiling of resistance that's held and been tested a couple of times, but it's nothing like as strong as these guys below. So to break through that is not going to take a huge amount of effort. And certainly these should provide some support in any retracement lower for gold at the moment. We're just starting to break away. This is the 1 minute. The 1 minute volatility trigger was on here. We're trading around it. Again, it needs to break through this level here. If we break through the high of that particular candle, then we should go higher. We've got a low volume node here and not a great deal of volume up here. So through to 26 looks pretty clear water. How are we doing for time? Okay, yeah, just pass back to Anna, if I may.
I just want to end up with the euro dollar because it did exactly what I suggested that it would do. I've actually got the 20-minute chart here with this is the initial volatility candle, but there are volatility candles going right up the time frames. We've got 30 minutes, we've got the hour, we've got the 4 hour, and in fact we've even got a volatility candle on the daily. But let's just stick to the 20-minute chart. 20-minute chart. Here it is. What I said was when a volatility candle is triggered, a volatility candle, in the sense we call it a volatility because our indicator is triggered. These little purple dots here. On some platforms they come out as little triangles. It means that the price action in that candle is outside of the average true range, and this is fired off in real time. It doesn't paint on the candle once the candle is closed, and it's a fantastic indicator because it tells you instantly that it's outside of the average true range. There's momentum that's come into the market, there's energy that's come into the market, and what tends to happen is once the candle has closed off, then the price will retreat into the spread of the candle before deciding if it's going to be a reversal or it's going to be a continuation of the move. Here we had the retreat into the spread, and then we had the continuation of the move again on another volatility candle, and then we had the buying coming in here on this hammer candle. But what it also does with the volatility candle is that it gives you another some more support and resistance levels. So if you have a whole series of them and you want to know, you want to sort of have an idea of whether you are going to get a reversal or you're going to get a continuation, basically what has to happen is it has to be a break of either the high or the low. Now, this was the first candle on the initial release from the ECB. This is all the price action in between. Then you had this big reversal, and I said for this to carry on higher, it had to break the high of this candle, which actually we have here a support and resistance line from our price-based support and resistance indicator at 1069. It has failed to get through there. So at the moment, you know, perfectly happily trading this retracement, if you like, but that's where it was likely to stop, and it has indeed stopped. Going over to the Renko, as I said, this is that fantastic move higher with all the noise removed because it's a Renko chart. And I said here, if you were looking for a short, what do I look for? I look for a change in trend in the trend dot, not the intermediate color, but a straight to the bright color. What has happened here? There's been a little pivot come triggered. So that little tiny little micro trend there, some traders might be happy with that. If they're only looking to take a few points, that would be more than sufficient for them. So if this is going to move, carry on up, where is it going to aim for again? Well, we have the lines, the levels already determined for us by this volatility candle. So, you know, moving forward, this price has to go either one way or another. At the moment, it's going back towards the volume point of control, which means, you know, it's probably going to go sideways for a little while longer. Now, looking at the daily chart, there's been a trigger here as well. It's happened before. What could we possibly end up with as a candle? Well, it looks suspiciously like a doji candle. Indecision, yeah, you know, it went all the way down, it's come all the way back again. Market doesn't really know what it wants to do. Where did it bounce off? It actually bounced off this level here, which was the initial buying for this little correction higher by euro dollar, which, you know, perfectly tradable on the faster time frame. So an interesting candle today. Not a huge, the volume underneath it is not massive, is it, David? For the spread of that candle, it doesn't look terribly healthy, if you like, because with volume price analysis, we want to see the volume supporting the price action. You know, the two have got to be in agreement. It's when you get disagreement and you get anomalies that you think doesn't look good, but they do take time. They don't, you know, it may not be in the next candle or the next candle after that, because now we have a volatility triggered on the daily as well. The levels are very clearly marked. You've got 1060, 68 roughly as on the 20-minute chart to the upside, and you've got a very clear level of support. It's at 0925. So this is on the daily chart, but plenty of room to take trades on the faster time frames. But as I said, I'm way out on the slower time frame. So, you know, on the monthly chart, what am I looking at? That's a very weak candle. We had the break from the volume point of control, a very weak candle. Why? We've got a wick to the top of the candle. Okay, today we've had a little correction, a little correction in the context of the monthly chart, but the levels are very clearly marked out for us. So if this is going to carry on lower, it's got to break the low of today's daily candle. So lots to play for. And of course, you know, I think, is it FOMC next week? Yes, I think it's coming back into play next week. So we'll see if Jay Powell has taken on Donald's criticisms, as it were. Huh? I shouldn't think so, no, indeed. But what we talk about here on these charts, whether it's the euro dollar, whether it's gold, whether it's an index, whether it's a commodity, really the lessons are applicable to whatever you trade. A VPA is applicable across the markets. Really, it almost doesn't matter what the ticker is on, you know, to the top left of the chart. So anything else you want to say? And of course, our indicators work across all the markets as well. Right, as I said earlier, if you've got any questions, then just drop me an email, anna@annacooling.com or david@quantumtrading.com. I think there was a question, actually, I'm not sure. Did you answer? Something about the indices, David, on the, can you see the question there? Yeah, I'll just turn myself off.
Apologies, I'm just reading your question, Linton. I think on my currency indices indicator, mine has 2 lines over the chart and moving averages. No lines, just the price action chart. Yes, they have 2. Sorry, on the currency indices. It does help if I switch my microphone on. Can you hear me now? Sorry, apologies about that. Just reading your question, Linton. Yes, on the indices, you have 2 lines which are moving averages, which you can add, or I think you can remove them. I'm pretty sure you can anyway. If they're not there, then just try deleting that particular indicator, re-adding it to a new chart. They should be there because I'm pretty sure they come there as standard. So hope that works for you. If not, just drop us a line at helpdesk@quantumtrading.com and the guys there will help you out also. I'm just going to pass back to Anna.
Thank you. Right, the website for the indicators is quantumtrading.com. Those were available, and as I said, we are working on TradeStation at the moment. So thank you so much for coming along. We will be back next week. Lots of exciting things going on in the markets. There's always something exciting going on. And as I said, if you want any more information, just drop me a line, anna@cooling.com, or David at quantumtrading.com. Enjoy the rest of the trading session. Enjoy the rest of the trading week, and we will catch you next time. Take care.